together. So just to inform you once again, just to remind you that if you can ask anything you want, I will try to help with anything that struggles you. Okay, so below the question box, below the actually the live, either if you are in Facebook, Telegram, or YouTube, just comment below the video, and I will be able to reply live, actually, to sit together to reply on your question, whether this is a technical question, fundamental question, or something generic. So let me just, because we are just 8 minutes away from NFP. It has been a very, very, very volatile day, a week, actually, I should say, as you already know. But Fed is out of the way. Hello, Capital. Hello, Sati. So Fed is out of the way. Bank of England is out of the way. NFP will be out of the way in 8 minutes from now. Gold prediction, yes, but let's have the data out first. Okay, let me share also my screen since you're asking about gold already. Okay, hello everyone. Hello Afridi. Hello. So okay, I was about to see to comment on this U-turn Wednesday, Thursday, that we have seen the U-turn performance, and then over here we have another U-turn, but on the other direction, if I can say something like that. But yeah, if you want to start with the gold, that's fair enough. So, however, okay, yeah, that we've seen like spikes up, spike down, another rebound due to ahead of the NFP. But guys, read the fundamentals. Remember that regardless of the dovish tone that we have seen, we have heard about from Mr. Powell, from the Bank of England as well. The Fed, which gold actually is a dollar cross and is affected by the inflation and the interest rates, it's expected to remain under pressure if we consider that, regardless of what Mr. Powell mentioned, there is still on the table another 50 points in June and another 51 in July. So the tightening is still there, regardless whether he tried to oppose himself from a very, very aggressive tightening, which is 75 points. He said that, okay, it might not be 75, but it will be 50. So tightening is a tightening. So gold overall, excuse me, gold overall remains under pressure. So all these ups and downs, it has to do a bit of a more of a lesson fear. This is what it is, fear. Fear about the growth, about recession, about tightening, everything, energy crisis, etc. So okay, I can see your questions. Excuse me, just for 5 minutes, just to um, um, uh, 5 minutes just to see together the NFP before we analyze the overall picture and see the future of euro dollar, of gold, the high impact of the Chinese lockdown, Fed, and etc. So, okay, euro, gold, euro, dollar. Okay, everyone is okay. Okay, that's good. That's good. So, remember, first of all, we are expecting an FP, right? So I'm gonna share with you the calendar as usual, and our calendar is here. Let me refresh it a bit. Okay, come on. Okay, apparently my connection is a bit slow. Okay. Nevertheless, the NFP is expected, okay, is expected to come at 380. So this is expectations for the NFP. If we, which is what's expected today, we're expecting a very, very solid outlook from the jobs in US, okay? Something that along with the inflation next week is expected to keep the Fed in track with tightening. What that's supposed to mean? This is supposed to mean that even if Mr. Powell try to surprise a bit and to shift a bit himself from the hawkish stance of the market, a solid jobs market today, which is what's expected if we consider the ADP and the initial jobless claims that we have seen for the whole April. A solid report today and an increase in the inflation next week. It's like the direct Fed for further tightening. That's it. I mean, they cannot do anything else as long as the jobs report remains solid, as long as the labor market remains strong in the United States. So we might have seen, like I'll put the dollar index on. You see it? Yes, you can. I will put back this on because we have seen a bit drift once Mr. Powell said that I'm not a fan of 75 points, but okay, we will proceed with 50 points, but we will not be as aggressive as we have been so far, and etc. They have blanked on this announcement, it blanked down, but soon is recovered, and this is because data talk. I mean, just considering the US economy, considering the data that we're getting, the high inflation, there is nothing else that the Fed can do. Is a tightening path for the rest of the year, regardless of these dovish or bearish comments that we have seen from Mr. Powell. And indeed, that this huge rally that we have seen yesterday was strengthened even more after the Bank of England, which actually also delivered a dovish hike, but they stated, Mr. Bailey, and it's the statement stated that okay, um, uh, we are not really, we will remain a bit. He delivered a stagflation warning. A stagflation warning stating that the UK economy is into recession, but they will remain. They will remain close to a more softer tightening path. So, however, UK is a bit different. Bank of England is different because it has been mainly impacted by the Ukrainian war as well, and is following now more or less more on an ECB approach rather than Fed. But we can see that regardless of what's going on, inflation is still high, right? Risks are still there, stagflation risk, recession risk. So central banks cannot really do anything else rather than trying to control the whole situation. That's why we have seen a quickly return consolidation. You can say, but Andrea, I've seen a plank once again this morning. That's ahead of the data. This is what it is. And the data should be out right now. So let's check them together to see whether they surprise or not the markets. Come on. Come on. Sorry for that, guys. I have a bit of a delay over here. Economic calendar. And they are out. They are out. For 28,000. So let me put that on. Let's have the 30 minutes chart. I know that you follow me. This is the 15 minutes chart. Dollar on the announcement, it remained like to the downside, but this is a good reading if we consider the payrolls. Non-farm payrolls are 28%, but the average hourly earnings, let me share this with you because it's very important. So let me share the calendar with you because it's a mixed calendar, it's a mixed release, sorry, because can you see that? We have 0.3%, so a decline in the wages, in how much people earn per hour, okay? That's the monthly. So the hourly salary has been deducted in April. Unemployment increase, but non-farm payrolls increase as well. So this is a more negative report than positive. So indeed, and we have a revised lower on the previous month's non-farm payroll. So that's a mixed report, unfortunately. Indeed, jobs came much higher than expected, around 40K higher than what it has been forecasted. But the wages have been declined, as you can see. So people are earning less, and the unemployment increased. So that's not good news at all. That's not good news at all. So that's why we might see pressure on dollar from now onwards until the end of the session, the end of Friday. Something that I wasn't really expecting, and I don't think that was the case. None was expecting this. Um, we were expecting actually a really solid report today. So let's get back to the dollar. You can see that on the release it came down to 103.20 territory and remains actually under pressure. And this is a bit logical if you consider that it's a negative overall report than positive. Dollar will fall then, but I think I will first clearly upwards. Okay, Adiola, I quite agree with you. What's going on? It will be under pressure today if we consider that it's a mist of NFP right now. But with the new week ahead, next Monday, the fact that the tightening is still on in the medium term. So in the medium term, daily picture, weekly picture, the dollar remains on bid. Okay, so of course all the eyes will be now that the NFP wasn't as good as it was expected. All the other eyes will be on the inflation from US next week. I think it's next Wednesday, so in the middle of the week. So we're expecting to see whether it will rise even more, or whether we're gonna see some kind of an easing due to the strong tightening, some kind of an easing on the U.S. inflation. But for the time being, as I mentioned, the mist of NFP data could add some pressure. So immediate support is the 30 minutes chart. So this remains an immediate intraday support level for dollar, which if it breaks, we could see dollar. I will zoom out a bit just to show you over here the picture. The next support level, if the low of the day breaks, then the next support level, as I was trying to say, it will be down to 103, round number. 60% Fibonacci level from the rally that we have seen since yesterday. Okay, so next support is around 103, while a break of that level could open the doors to yesterday's lows. Okay, momentum is detecting intraday. Stochastic behaves a bit weird, so it's still below 20, but it's trying to show some kind of a bullish, and you cannot see it. Let me just zoom it in. No, let me just try to. Now it should be visible. No. Uh, okay, let me just increase it. Yeah, you can. So you see, stochastic is below 20, but it has some kind of a bullish cross over here, not confirmed that yet. So the fact that it's struggling to break 20 implies that the sellers are in control, and obviously we need to wait a bit for confirmation. But by considering this, okay, 30 minutes candle, the fact that it came down, broken already the previous low, and breached the mid level of the rally that we have seen since yesterday, it could trigger further selling pressure for dollar, at least intraday, in the very, very short time frame. Now, I'm gonna get back to your questions. Let me scan through a bit the news because I want to see the breakdown. As I mentioned, the negative about today's payroll payment, unemployment rates, employment data actually from US is not the NFP, because NFP beat expectations. That's good. The negative is the higher unemployment. Okay, more people are without job than last month, and the deduction on the hourly earnings. So the deduction of the salaries per hour. That's the negative side. So, and the eyes are on wages, because remember, what matters most, okay, is people to have job, okay, the majority of the people to have job and to get paid well, right? So we have jobs, but we have seen that unemployment increase. So that means that we have less jobs than what we should, and that has increased the unemployment rate. And also, we have a miss on the hourly earnings, which to a downside. So this downtick on monthly average hourly earnings um, is a sign that is a negative sign, actually, at least intraday. Um, so yeah, that's why, as I can see over here, the yields, the 2 year yields, the short term yields also fell on the headlines, on the announcement of the data. Um, so down, that's dollar, as I mentioned, intraday 103 is the next support level. Overall, the outlook remains positive as long as we don't see the asset falling below the 2 weeks lows, which is 102.29, and considering the further tightening, dollar remains overall on beat, but intraday under pressure. Now let's shift to gold, because you keep asking about gold and you keep asking about gold and dollar again and euro dollar, etc. So I will shift quickly to gold. Where's my gold? Somewhere here, I'm sure about it. It was here, wasn't it? Here was in front of my eyes, but okay. So I'm gonna start with what's going on in this 30-minute chart. So dip lower on yesterday's strong dollar, sideways the whole night. Found some support so far today, consolidating though before the EU Open. On the EU Open spike, but consolidating as we moving into the US session, and on the data release, as you can see, it found some ticks higher. Not significantly, but some ticks higher. Let me put the intraday setup. Sorry, excuse me for a second. Not that one. Yeah, here we are, my intraday setup. So if I just emphasize only on the very short time frame, this is a 30 minutes chart, okay? It was consolidating and it broke this consolidation, which lasted for 1, 2, 3, nearly 4 hours. And on the release, it broke higher, breaching 1889 territory. Okay, so momentum is rising. We have a bullish cross in the stochastics just now, and RSI pointing higher. So it seems that intraday, in the very short time frame, I mean, like for the next few minutes or even an hour, etc., we have some support. The moving average are pointing higher, so that implies that there is further steam to the upside for gold, at least in the very, very short time frame. Guys, remember, I'm in a 30 minutes chart, okay? 30 minutes chart. This boost that I'm referring, and this positive bias that I'm referring is based on a 30 minutes chart. So that might last for the next few sessions. Okay. Okay, let's see what's going on over here. So it broke. So we need to wait for this candle to close. Let me put the 50 minutes chart just to see what's going on. Up, until it broke it. flatten a bit. It's still pointing upwards. RSI up, stochastic up. Yes, so there is some momentum to the upside for gold intraday. So it hasn't, okay, obviously this candle hasn't closed yet, so we need to wait a bit, but it has already broken and retested the 50% retracement. So the next level to be seen would be the 1893, which is the 60% retracement level as well. So yeah, that's for gold. Let me check the 4 hour and daily chart. What we have over here, we have the gold remaining for 3 days in a row above the 20 period moving average over here, but hasn't really managed to recover at least 50% of the losses that we have seen since last week. Sorry, since yesterday, what I'm talking about, since yesterday. So, yeah, as you can see, the higher the time frame gets, the more you can see that the momentum is no longer positive. So the momentum is positive only for the short time frame. Intraday, the asset remains in a down channel. Let me draw it for you. I touched about it yesterday as well. No, that is not it. Let me just. Here we are, regression channel here. It is up to today over here. Okay, perfect. So remaining to the downwards below all moving averages. Um, MACD negative. Intraday stochastic increased a bit, but remains below 50. So as long as the asset doesn't break our up and trend line and exit this downwards channel, and considering that it has a negative correlation with the interest rates, then gold is expected to remain negative. But by drawing this channel, it will help you to identify any breakout, any significant move outside and above the channel. So keep that in mind. This is a daily chart, by the way. As I said, daily remains under pressure in a downwards movement, in downwards channel. Intraday, we have seen in this 50 minutes chart a big boost to the upwards, to the northwards, exiting this range that we have seen the last few hours. But we need to wait this candle to close, because as you can see, it already turned back to the open price. So this might not be a sustainable move. You need to wait for this candle to close to see whether it will close above the channel or within the channel. That will imply that this boost was just temporary and might not last, but instead to move downwards again. So wait, there is another 50 minutes until the candle is closed. Okay, let's wait and see, guys. But as I mentioned, resistance area, if indeed it managed to close outside this range, the next resistance area will be 1892, while on the flip side, if this candle closed doji, or if it confirms a pullback below the 1880 territory, okay, 1880, okay, maybe precise, round number, okay, we'll put it over here, 1880, because if it breaks below 1880, that means breakout of the range, of the intraday range, breakout of the 50 period moving average. So that implies to help pullback for gold. And so if this is the case, the next support levels for the asset is 23% Fibonacci, these lows, this double fractal low that we got the last 2 days, so 1872, and also the edge of the Bollinger. So this is the immediate floor for gold intraday. This is a 30 minutes chart, okay? I keep highlighting this because we are analyzing in a many time frames, so I don't want you to get confused. Euro dollar, let's move on to euro dollar. Okay, here we are. I think it would be a good idea to start doing the live analysis 30 minutes after the data. So the markets are calm down a bit and we have the 30 minutes candle closes and etc. So I think it will help you from technical perspective at least. Um, so let me just so what we have here, euro dollar was initially in a pulled back ahead of the data. On the release of the data, it spiked higher to 106, but quickly turned down. I will put the 50-minute chart just to see the candles. So spike on the data and then quickly turn down. But this is not clear, okay? This is not clear. So we need to identify the support and resistance levels over here. And because I can see some highs over here, so higher high and then a lower high, I'm gonna apply a Fibonacci extension. Okay, so oops, sorry, where's my Fibonacci? Sorry for that. Here it is. Okay, so that will help us identify the resistance levels. Now, in regards to the support levels, obviously the latest low at 105.60 is our very short immediate support level. Let me get back to the 30 minutes chart, and the very next one actually will be just okay, that's interesting. That was used to be a support level, now turn resistance level, now turned into support level. Also coincides with the 50% Fibonacci level. But the picture right now for euro is more of a less consolidation. We cannot see a clear direction over here. Why is that? Fast fast time is flatten. So intraday is a 30 minutes chart. So okay, the immediate support levels is at 105.60. So a breakdown and below that level could open pretty much the doors to 105.40 and even lower. Okay, actually to the lows of the day, but I will put the Fibonacci bottom just to be precise, 109.90. Okay, so but we need to wait and see whether it will manage to break down this 105.60. To the flip side, higher, I have put the Fibonacci extension over here, but I cannot really see momentum increasing to the upside. MACD cross and turn positive on this rally that we have seen since yesterday, but you can see that the signal line remains close to zero. Stochastic turned down, pointing to the downside. RSI the same. It started detecting since yesterday, so it gives the impression that there is more pressure to the downside, and that comes in line with the fundamentals as well. So keep an eye on this support, guys. Keep an eye on this support. Now if it keeps that floor, but instead it start extending higher again, we need to see a decisive candle, bullish candle, extending and moving above the recent high, above the 106 level, in order to suggest that it could move another 50 pips higher and breach again yesterday's highs. But let's wait and see. Okay, now what do you think about your dollar? Do you think there is any hope recovery, judging that Fed is tightening policy? There is China lockdown impact on gold and yes, okay, one by one, my dear gold, my dear Adeola. So I guess from the question that you have done to me, you're not thinking intraday or 30 minutes chart, etc., but you're referring to a medium term need for the next few weeks, then the next few months, and etc. This is euro dollar, okay? Continuous decline. Why is that? First of all, consider that every cross, right, like this one, euro dollar, presents two worlds, presents two economies, Europe and US. and it's a comparison between the two words, the two economies. We have, first of all, we have the US, which is slowly growing. Okay, labor market is doing well. I mean, production is okay. Inflation is the risk in the US, like in Europe as well. But that's why they have proceeded with tightening in order to control the inflation. But in general, the US economy, is one of the is the only economy, along with Canada, that presents growth. That's why they have proceeded to tightening in order to control inflation as well. And the more aggressive the tightening is, the more the interest rates increases, the stronger the currency of that country gets, right? Remember. So that's why dollar is one of the strongest currencies, not this year only, but since last year, since summer last year, if I'm not mistaken. Euro on the other side, okay, other than the fact that they keep their the policy unchanged, ultra accommodative, nearly to zero. Um, we had the situation with Ukraine, okay, and actually it's not the situation in Ukraine; it's more or less the energy crisis that we are facing, and the one that it has been mainly affected is Europe because of the strong bond that it has with Russia. So they the fact that they were relying on Russia oil and Russian gas and etc. Has kept Europe vulnerable. Okay, so um, due to the energy crisis, that is something that is not new. It started from the pandemic, then we had the supply chain disruption, and then now with the Ukrainian war, it got bigger and bigger and bigger, right? That's why we have sharp rise in the cost of living, not solely in Europe, all over the world. Sharp rise in cost of living, rise in everything, in services, goods, I mean, in everything, lack of sources. Okay, so Europe is the one that is in recession already, or it has the biggest recession risk. Actually, I believe that it have already entered into a recession, but we haven't seen it yet. But yeah, it's the one that has the biggest problems from all, due to its dependency on the Russian oil, due to the ultra accommodative policy, the huge debts, everything. So, and all this debate on banning and the sanction on Russia, it doesn't really, okay, they have to take actions in order to fight Russia, but it doesn't mean that this is helping Europe from economical perspective, at least. So, yeah, Europe is the one that is the very first on a recession risk. That's why the ECB, due to all these risks that we're facing. That's why ECB kept the range and stayed unchanged, and they haven't proceeded to a tightening. And by considering that now, let me just show you something as well. I want to show you. I think I showed it before, but if you consider that, where is it? Come on. So now Europe is having um, where is it? Come on. Um, yeah, Europe is having a 0% interest rate, but US is having actually 1%, sorry, 1.50% interest rate. So there is a huge gap between the interest rates. So the huge interest rate differentials. So that it will keep the euro dollar under pressure. So strong dollar and very weak euro. That doesn't look to change. That doesn't seem to change anytime soon. It is what it is. I mean, there's nothing positive. There's no hint of a positive sign for Europe in the long term. From your question, I understand that you're referring to long term. Even intraday and even in the very short time frame, or I don't know, in a daily basis, if you prefer, any kind of swing that we might see to the upside, like that one, that one. If I zoom out a bit, you can see these corrections that we were having are just corrections, because after all, in the long term, what matters is the fundamentals. Okay, so these were just corrections, some positive news that they drive the sentiment on the favor of euro and so on and so forth. Okay, but it is what it is. I mean, uh, so Ukrainian war, the energy crisis, the huge interest rate differentials that we have between ECB and Fed, all these are expected to keep the euro dollar under pressure. Now, you have spoke also in regards to the China lockdown. Why China's lockdown matters? It matters not solely for euro dollar, but for all the currencies, the whole world, and more precisely for euro, for gold, for metals, industrial metals, etc. Why? China is one of the bigger consumers, buyers, right, of metals, of oil, right? So the lockdown implies that less demand implies to a less demand for oil, okay? And that is pushing the oil even higher, okay? Because Chinese lockdown means that the manufacturers in China are closed, at least in Shanghai and Beijing. So that means less demand. And that is something that is boosting the energies prices higher. Okay. If you have any further question, let me know. Yes, Nasdaq falling, as you said. Dear Daniel, falling, breaking the latest fractal. So my negative momentum continues. I will put the 4-hour chart just to see the overall picture. So it seems that I'm going to clear a bit this mess, and I will. Remember, this is a channel that I have put in the end of April, and now what I'm going to do is just extend it, not fill left, sorry, right. Yeah, just to extend it because it's quite crucial. The Nasdaq went back into the channel and is extending this downwards channel that we have seen since the beginning of April. So right now, if I zoom in, whoops, yeah, here we are. Okay, broken the latest low of the day and extending lower. So the next support level for Nasdaq, okay, because it has already broken this week's lows. So the week lows is at, come on, be somewhere. Okay, it hasn't breached it yet, but it's just a breath away. So the week's lows is at 12,700. Let me put the hourly chart on just to see it together. So you see, this is the week's low. So considering the fact that fast moving averages keep pointing lower, MACD is negative, strongly negative, it's not really changing. RSI falling, stochastic falling, and there is further steep to the downside, as you can see. Then the next support level is the 12,700, while a breach and a breakout of that level brings our the mid level, the middle line of our channel as the next um, southwards support for Nasdaq. Okay, so there are a lot of reds in the screen right now. Stocks are down. Uh, Stocks are down globally. Um, so the majority of the currencies are down. Um, and that it is what it is. I mean, don't fight it. Is the concerns over aggressive central banks tightening. That's why we have seen equity since yesterday being a sell-off, and actually okay, the fact that um, the NFP number came above expectation, it could add to this to this sell-off, even though, as I said, it wasn't a good report because the wages declined and we have seen unemployment rising, but that was just in April. In general, the job market the US jobs report were solid, and we still see new jobs coming. So it is what it is. So full of red screens all over the place. Stocks under pressure, bonds under pressure, um, yields up, dollar rebounded, but there's a big question mark over here. Let's wait and see how it will end the session. But overall um, remains in a positive outlook. And now this is very very interesting. The Nasdaq that Daniel stated. You're saying buying. I don't know why you're saying that, my dear Daniel, but it just broke the recent low. It keeps extending lower. Okay, there's a long tail in this 30 minutes chart to the upside, but it closed. You see that this is a 30 minutes chart. It closed outside Bollinger's. It closed below Bollinger's, breaking the low of the day, and it's just a breath away from the low of the week. So if it confirms anytime soon, actually today, a breach and a breakout of the 12,700, then so if this level breaks, can you see that it has been since it's a key support since the 25th of April. So if this breaks, then outlook resumes to the downside. Okay. And okay, let me check the 30 minutes chart. Yeah, I checked the 30 minutes chart. So despite the tail higher on the data, it closed outside Bollinger's. So negative outlook for Nasdaq and for Nasdaq in the intraday basis, but also the same stance for the medium term base as well. So it came back down within the down channel yesterday. Is extending losses today. So it is what it is. And let me just put the daily chart on just to see whether there is anything different on that. No, nothing really. So let's not forget that we had a bearish crossover here of the 20-day below the 50, and the spread over here, the gap between 20 and 50-day moving average is expanding and expanding. That suggests further selling pressure for Nasdaq. Okay, you can see also that MACD extends further to the downside. Ignore stochastic in the daily chart because this is my intraday stochastic, is the one that I'm using for 30 and 1 hour chart. RSI remains below 50. It fails to provide any bullish signal. Oh, Outnet is saying the same thing. Guys, I don't know why you're saying buying on Nasdaq. I don't really get it. I don't know. One saying us up, the other saying down. Ignore what each one of us is saying, my dear wise ninja. Keep on what you are seeing, what you are thinking. Each one of us has his own strategy. Each one of us has time frame preferences. For example, Daniel might trades, I don't know, a minute chart. Daniel, I don't know if Daniel can advise, but he might trade. He might trade in 1 minute chart. So don't get blind and do whatever each one of us, including me, are saying. Try to trade what you see, because I don't know what kind of time frame you're trading, my dear Ninja, right? Who is Ninja? Where is Ninja? Ninja, I don't know what kind of time frame you're trading. I don't know the indicators you're using. I don't know what kind of strategy you're using, whether you're a scalper, you are a trend trader. I don't know what you're doing. I'm just stating what I'm seeing. So you need to decide. You need to trade what you think, what you see actually, not what you think, what you see. Okay? Um, Duncan is saying for a downwards gold. We already seen gold. Okay, yeah. The candle closed. Thank you for bringing that up. And Duncan, yes, it massively decline, breaking this in this very short time frame range, deep, broken my 1880 level, my 1876, and closed lower. So the next support level for gold intraday at least is the 1872 and 1871 30 territory. That's intraday. That's a 30 minutes chart. Let me get rid of this mess as well. So, oops. Yep, here we are. Oops. Okay. Massive break. This hourly candle closed down and brought gold back down. That is then on the strong dollar as well. So yeah, attention would be on this territory over here in the lower Bollingers. Let me check something. So apparently we have a daily candle so far for gold. But yeah, have in mind tonight, once the market closed, to have a look on how the weekly candle, okay, I will put you the weekly candle, how the daily candle of gold will close. Because if it stays in closure within this downwards channel, and if it closes bearishly, that will imply to an extension of the downwards channel. So that will imply to a retest next week of the 1850 level, or even of the 1840, or further down to 1830, because it will be a continuation of the downwards channel. Okay, have this in mind. Stand by 3 minutes. Nasdaq. Daniel persists. Please tell me about dollar index. You have seen that after the data. Okay, this is 30 minutes. On the data, spike higher, but now turning back down again. I don't know what else I should say about dollar, but Talat. Volatility, only volatility was not on the NFP. Now, there is not a clear picture as you can see. Can you see that all of my moving averages, the intraday moving average, so 5, 9 exponential moving average, and 50 exponential moving average, all clash. So for now, the situation is a bit directionless. So it's sideways. Uh, what I can do is just put on my support and resistance levels, right? In this 30 minutes chart, and wait to see whether it will trigger either to the upside or to the downside any of these two support and resistance levels. This will make this situation clearer to me. But overall, in the long term, it is what it is. It remains to the upside. So if I put the weekly chart on, you can see that it was overbought last week. Today, this week, there was a looks like a doji candle, so it might try to consolidate a bit until it gets back to the Bollingers, within the Bollingers. But overall, in the long term, gold remains positive. Okay, so yeah. So keep an eye on this intraday. Keep an eye on 103.67 and 103.20. It's your immediate support and resistance level. A break of 103.70, it could bring back to the attention the highs of the week, which is at 104. Why? A breach and a break at 103.20 will open the doors to yesterday's lows. Okay. And Dow Jones. Okay, we have seen Nasdaq. Here it is, very, very similar performance. Okay, here is Um, and anyway, it will be very helpful if you tell me the time frame that you want me to cover. So, what's going on here with Nasdaq? I'm gonna start. Okay, guys. I will put this. I will leave this line on. Okay, the 34,000. This is a daily chart because it's a key sub resistance level. This is something that you should all have on your charts. The 34,000 level, just for the future. Okay, because it's a round number. It's a key resistance level. Okay, so keep that line on. Now, in regards to what's going on right now, what's going on? Okay, I'm gonna draw something for you. I will try to connect these lows. Lower low, okay, it's not ideal, but you can see, I think you can get the picture. Lower low, okay, a big swing over here. Lower low, lower low. So we are seeing something like the last few days. I will put the 4-hour chart just to show you this shape. I will put it in a red line, in a yellow line, sorry. Yellow line. Can you see that it looks like an a triangle but a reverted one? Okay, can you see that? So that's 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 uh, that implies the retest of this bottom sooner or later, the 32,500. And if I just go down to the 1-hour chart to see the momentum over there, I can see that there is still some pressure to the downside. Stochastic over here, bearishly crossing, is still pointing further to the downside. Um, there is like the asset is right now retesting the floor of the day, didn't broke it yet, so we are a bit on the wait and see stance. We need to see the breakout of this latest low, but if that indeed like confirm, the next support level, just to zoom out a bit, it will be on yesterday's lows and the 32,500. Now, if the 30, sorry, if the 32,500 breaks, then all the eyes will be on this floor over here. So that is the year's low, if I'm not mistaken, the whole year's lows. Yes, it is. Actually, it's more than year's low. It's one, yeah, 30, 30, 12, 30, 15 months lows at 32,150. Okay, can you see that? That's for your own information, just to have in mind for the week ahead. Um, Gold sell. Yeah, gold is under pressure. Gold is under pressure. We have seen gold. Gold. We have seen Dow. Hello, house. Hello, everyone. If euro price breaks and close below 105.6, I will take another sell. I don't know what you're gonna do. I cannot tell you what we're gonna do, my dear Adeola. Just trade what you see, not what you think. Okay, check your momentum indicators. If you're if you I assume you're referring to intraday basis, but yeah, stick on what you see, what your indicators are telling you. So what we have over here, okay, so it retested the 50, a bearish candle with a long tail to the upside. Some rebound has been seen the last 15 minutes. What we need to wait and see is whether this will be sustained. But the fact that it closed, that candle closed, as I mentioned earlier when I was analyzing euro dollar, the fact that it closed below this support level that I had, okay, so okay, we are. The fact that it closed below the 38.2 Fibonacci level, okay, that implies to more selling pressure than buying pressure, more sellers than bulls. So is this a correction? Is it just the push in order to sell at the higher price? Let's wait and see. Let's wait and see. Because for the rest of the day, there are no further news other than some Canadian IV purchasing manager index data. But yeah, nothing really nothing really for the rest of the day. So yeah, let me just 15 minutes chart down, corrected. It didn't sustain it when it's going to the downside again. It didn't break the 20 period moving average. So yeah, it seems that the bears are like keeping like trying pressure in the market. So 105.6, yeah, it has already broken because it closed below it. It's a bit of a correction over here, but it might be, yeah. So 38.2. Yeah, it is what it is actually. So let me just put this in the full length just for you to be able to see what I'm talking about. So 38.2 Fibonacci level already breached and broken. So we have a bit of a rebound, try to find some floor, but that doesn't look likely. As I said, RSI is a bit neutral. Stochastic remaining very, very close to 20. We don't have a bullish cross yet. Okay, MACD is positive, but we already have a 38.2 Fibonacci level reversal, which is a key retracement level. So let's wait and see. Let's wait and see. So that's the 15 minutes chart, rebounded and is turning back down again. Yeah, it's a continuous lower highs and a continuous lower low. So yeah, pound. By the way, no one asked about CAD, and we had Canadian dollars as well. So pound was one of the biggest losers the whole week. That's why I'm gonna start with the daily chart because it was a massive decline. And actually, I'm gonna show you weekly chart. Why is that? Because I need to find support level. And as I mentioned yesterday, a break of 124.70, which is my 60% Fibonacci level. This is analysis that I have done yesterday. And you see, it indeed closed yesterday. Actually, let me be precise. It retested the 61.8. It didn't manage to close below it. It closed slightly higher, but today it extended below the 61, and that implies to a retest of the next important support area, which is taking us back to June 2020 and 2019 and the 122.40 area down to 120.70 area. Big weekly negative candles, a lot of bearish momentum. In general, pound is one of the biggest loser of the whole month, of the whole year. And the overall outlook doesn't change, the long term. Now, you can tell Padandre I'm not interested in the long term, I'm interested in the 1 hour chart or 30-minute chart, and etc. Okay, let's wait and see. The 123.80, is this what it is? Yeah, that looks to be like yeah, it tested several times, bump, 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 failed to break above it, consolidating a lot, retested further lower over here, but it quickly turned back up again. So yeah, it's neutral, it's sideways. So you need to wait and see whether it will either break any of these two levels or it's very neutral. Cable is very, very neutral with sideways. MACD close to zero. RSI close to 50. ATR flatten already, so there is a lot of consolidation. Not very interesting. as long as we don't see either a move above my 123.90 resistance or a move breaking decisively and the 122.70. Because can you see that my Bolingers are flat as well? My fast moving average are also flat as well. So directionless. There's nothing else to be said about cable, I'm afraid. Yeah, I agree with you, Deola, in regards to euro dollar. Yes, I agree with you. Price will adjust downwards. Let's wait and see. Yeah, we need. Yeah, it's different what we think and it's different what we see. So, okay, this is what we think, but we need to wait for confirmation. If confirmation doesn't come, then it's pointless. And you see, it closed positively below 20. Now it's trying to recover. It might be some kind of a boost ahead of the week's end. Will be sustained, will not. It's better to wait and see, okay? Because it's a bit of a weird times. Overall, overall, euro dollar should remain under pressure. But because it's the end of the week, it's Friday, it's the end of the week, as I said. So we need to wait for the market to calm down a bit and see what's going on. But yeah, 15 minutes short down up, trying to boost to the upside. Very flat. Yeah, we need to wait more about the euro dollar, I'm afraid. Yeah. Guys, uh, yeah, let's finish with Dollar CAD if you don't have any further questions. Uh, yeah, the data from Canada were a bit disappointing as well. The participation rate and and unemployment rate remain constant, remain as expected. Slight decline on the unemployment rate, but the net change in employment presented only a 15,000 growth, so nothing significant. That's might be the reason why dollar cut wasn't so affected, wasn't impacted from the Canadian news. Remained sideways since yesterday morning, driven mainly by oil and the high oil prices. Sideways for now, um, as dollar remains on bid. So if it extends above this double top that I have at the 128.70, then the next resistance area is up to 129 and 129.15 and then 29.12. That is the high of the week. This is the next resistance area if it managed to cross above this double top that I have. On the flip side, only a break of 128.10 could open the doors down to 127 area over here, 127.30. Okay, so if you don't have any further questions, I will call it a date. Let me check a bit the news to see whether I missed anything. Uh, Elderson from ECB believes that the weaker incoming data don't suggest so far that we are entering a recession. I don't know why he's saying that. I mean, even Bank of England admitted that the UK economy is entering a recession. I don't understand why Eurozone it doesn't. ECB, why it's so afraid of confirming that unfortunately things are not going to good and the data are horrible and we are entering a recession. I don't know why they don't really want to say that, but we had the German industrial order this week, which were terrible, clearly stating the impact from the Ukrainian war, from the energy shock, from the high cost of living, from the high expenses that the companies are facing. So, if that's not the recession, what it is? Um, uh, yeah. So, yeah, it is what it is. So, dollar. and downs for dollar over here. We've seen cable, we've seen euro dollar. Okay, so yeah, that's it. Any further questions? No, dollar CAD will likely consolidate because of oil prices, disappointing labor data, and rallying of dollar. Yeah, you're absolutely right, my dear Adeola. Consolidating intraday. Let's put the daily chart on. It's at the peak territory of the whole for November, December, January, February, March, April, May. So for 7 months, it's at the 7 months high territory. Big boost yesterday, extended gains today. So, and the momentum is still positive. So, who knows? But yeah, consolidation might continue for the rest of the day. The weekly candle, uh, we're waiting to see whether the weekly candle will close positively or whether it will close dodgily. I will imply to a potential reversal, but we need to wait and see. In regards to the weekly candle, we need to wait for the markets to close tonight. Thank you very much for your kind comments, Adeola. You want them here for you, me and Stuart, and now our new analyst Kader. So yeah, thank you very much for attending. I think I'm gonna call it a day if there are no further questions. Um, Take care. It has been a very volatile week. You already saw that. You saw that U-turns. And a lot of volatility expected next week as well, especially on the inflation of US. Um, that will be the confirmation whether we're going to have 75 points in June of rate increase or whether we're going to go with the 50 points like Powell stated. But for the time being, the market is pricing in 83% of a 75 points rate increase in June. That's something that will continue to support dollar until next week and the next week as well, okay? And for the upcoming weeks until the Fed meeting, more precisely. Thank you very much. Hope you're having a great day ahead and have a great weekend ahead. And I'll see you again next week. Bye bye.